Hi, are you thinking about leaving your job to start a business, or are you currently self-employed? And either way, are you just thinking that, I'm just not sure about my healthcare options, and maybe pursuing that business as opposed to staying in your job is something that you're just kind of holding back on because you're just not sure what it's going to be like after you leave your job. Well, my name's Kevin and I'm from maximizingecommerce.com, and I'm a full-time e-commerce business store owner. And before I went into basically business for myself, leaving the job, I basically had a job and an e-commerce business for about 3 years. And prior to me leaving the working world, for the previous 5 years, I actually was working at a health insurance agency, and I did training for health insurance agents. I hold an insurance license in the state of Florida and multiple other states. Now, I've got some options here for you, but please make sure to consult with an appropriate professional about your own specific needs and your own specific situation. So please don't take any of this as advice. This is just some basic information to at least help you as you do your research, thinking about what you might need to do as far as healthcare options are concerned. So first thing I wanted to talk through is COBRA. It's the Consolidated Omnibus Budget Reconciliation Act. Now that's a whole mouthful, but it's kind of cooler just to say COBRA. COBRA just means continuous coverage of your existing plan. So basically the way it works is, let's say you leave your job and you currently have health insurance, and it could also be if you go to a different job. You could stay with the coverage that you currently have. But bottom line is, especially if you're leaving the working world, so to speak, to go in to self-employment, this could be a good option for you. So basically, you keep the same plan, except what happens is, essentially, let's say the plan costs this much money. You might have only been paying this much money because your employer was paying the difference. So when you go into COBRA, you do the full amount, plus they charge you a little small bit on top of that as an administration fee, basically, and you have 60 days to sign up for it. So even though you have 60 days to sign up for it from the time they send you out a letter basically saying what your options are for COBRA, your coverage would begin as soon as your coverage stops. So if your coverage at your job, where they're paying for the portion of it, if that ended on, let's say, June 30th, July 1st would be your COBRA. So your effective date would always start back to July 1st as long as you're still eligible for it. So even if you waited until, in my example here, until August 12th, you're still going to have coverage back to July 1st, and they'll have you pay back to July 1st, even if you didn't use it. Because the whole point of it is it's continuous. And at the time I record this video, you have 18 months of COBRA. So then you would need other options. Now, maybe COBRA is the right thing for you. Maybe it's not. It depends. If you're younger, you may want some of these other options, or if you're healthy, because generally speaking, COBRA is, or employer insurance, I really should say, it's designed that pretty much everyone's paying the same price. So it all kind of averages out as to what people are paying. But when you're getting individual health insurance, your age plays a factor. In fact, with the Affordable Care Act, is the way I'm recording this now, this is still the case, that basically whatever a 21-year-old pays, a 64-year-old can pay up to 3 times that amount. And then there's kind of a spectrum in between. So it just goes up proportionally there. So I don't want to get too caught up in the weeds on that. But if you're older, or if you have a family, because also too on group health insurance, if you have children, doesn't matter if you have 1 or 50 kids, as long as they're all your kids and your dependents, they're all covered under the same price for children. So it doesn't matter how many children. Individual health plans are a little bit different. So individual health insurance, you really have 2 options: on marketplace and off marketplace. And you're like, what's the marketplace? Well, if you've ever heard of healthcare.gov, healthcare.gov is essentially on marketplace. So if you're in a situation where you qualify for a subsidy, you could get a subsidy if basically you make between the poverty line and 4 times the poverty line for your household size. You can do a little research online to figure out what that is. But if you do, you could potentially get a subsidy from the government, which is really just a tax credit, and you're getting it up front. But make sure if you do go this route, you speak to a agent who is certified by the health insurance marketplace to get you the subsidy. If you go off marketplace, a lot of The big name companies that you've heard of have plans on and off marketplace. Actually, some companies are only on the marketplace, some are only off the marketplace, but you got to do a little bit of research. What I would say, and this is just a helpful hint as someone who used to work at a health insurance agency, we used to buy a lot of leads, and a lot of people out there buying a lot of leads. So if you're going online and you're doing research, unless you want a lot of phone calls, do not put in your phone number right away. I would ask around friends for referrals before you go online and submit your contact information, unless you just enjoy getting lots of phone calls. I would hold off doing that until you've at least exhausted some other resources of at least asking around to friends or things of that nature, of maybe an insurance agent in your area you could speak with. Because if you put your information out there, you're going to get lots and lots of calls. It's a very competitive industry, insurance, and there's if you ask for quotes, you will get lots of people calling you for quotes. So just throwing that out there. Another option you could do is you could call either the health insurance marketplace directly, or you could also call the insurance company directly as well, as opposed to, I would say never go online and look up, health insurance quote and then put in your phone number. So if it looks like you're getting a quote, you're probably not going to get a quote right away. Some of the websites out there are a little not as transparent as they could be about whether you're inputting your information to get a quote right then and there, or if they're going to have someone call you. So just word to the wise out there. These ones I have here in blue are also called qualified health plans. Whether you're going on marketplace to get a subsidy or just buying something off the marketplace, meaning directly through the insurance company, these are all qualified health plans. Once upon a time, they used to have not even a couple years ago as I record this, there used to be a penalty if you didn't have health insurance. So if you didn't have a qualified health plan or some sort of exemption, you would get charged a penalty by the government the U.S. government, when you go to file your taxes. That's no longer the case. And I would never suggest to anyone to just say, I'll just pay the penalty. Because the bottom line is, what I really want to get across here is, with insurance or whatever you're getting, make sure you're covered. Because at the end of the day, you never really know what's going to happen in life. My father actually was 61. He was healthy, and then he found out he had a brain tumor. And unfortunately, we lost him about 16 months later. And it was one of those things, it just came out of nowhere. And my sister and I have talked about the bills, and the bills probably were over $1 million if my mother didn't have health insurance. My mom and dad didn't have health insurance. So it's not so much about when you're getting insurance. It's not about whether it costs you a $10 copay to go to the doctor, or you have to pay $200 or whatever the case is to go see a specialist. It all comes down to those big catastrophic things that really could bankrupt you. That's what it all comes down to. So these qualified health plans, they come with a lot of bells and whistles. There's a lot of things that by law they have to cover. So because they have to cover certain things, they're more expensive. Whenever insurance is covering more, it tends to be more expensive. If basically the insurance company has to potentially pay more money, they're taking on more risk, so they're going to shift some of that risk back to you as the consumer in higher premiums. So these tend to be very expensive. So if you don't have the option of COBRA, or you have to get a plan because maybe you have pre-existing conditions or something like that, because these also cannot exclude you for pre-existing conditions. That's great if you have them and you need that covered, but if you don't need pre-existing conditions covered because you just you haven't really been to the doctor about all that much stuff, or you have a history of cancer or something like that, there's other options here for you. So these here I put as two other options. Short-term medical policy. So short-term medical policy is kind of like regular health insurance, but not. They tend to be underwritten, meaning not everyone gets accepted. Now in these, you could get accepted if you left your job and you have a 60-day window to do that. These blue ones, options I have here. Otherwise, you can only sign up during the annual enrollment period in the fall. They call it open enrollment. It's generally like November 1st to December 15th, but check in your area as to what those exact dates are. Now, short-term medical policy is underwritten. So even if it's not, an underwriter is going to examine it for 2 weeks and they make you go get a doctor's appointment, there just may be questions and they may check your medical records just to see what you've had a history of, and they generally don't cover those things. Now, short-term medical plans, at the time we record this, it's 364 days was the last I checked, was how long the longest plan could take, and you could have a short-term medical plan for up to 3 years. So that gives you some options. But just keep in mind, they don't have all the best bells and whistles as on Marketplace, and they also don't cover as many things. And if you have pre-existing conditions, generally they don't cover that at all. So keep that in mind though. But if you're healthy, you may want to look into that to see if it's a savings enough for you to justify going into that. A lot of times people say actually it is. But always, talk to a professional about your situation and challenge them as to what your options are in one case. If they're giving you, hey, here's what I think you should do, why is that? Please compare it to something else. That's my little trick for you, is make sure you compare it to something else and get quotes from multiple different companies but don't just go on the internet and put your phone number in a bunch of different places. But I would recommend getting quotes from multiple different places. And then next here I have cost sharing ministry. So this actually I signed my family up for. We did a cost sharing ministry and a little bit of COBRA as well. Not all of us are on COBRA, but we're all in the cost sharing ministry, which basically there's a variety of different companies. There's different companies with different beliefs. Generally there's something you have to attest to, spiritually or whatever the case is. I'm with a company called Liberty Health Share. So far, pretty happy with them. It's still relatively new in my journey with Liberty Health Share, so it's hard to really say. But the nice thing is it's much less expensive. Like, it was about half the price as COBRA. Now, there are certain things, like if you have pre-existing conditions, they're not covered for a certain time period for like the first year, and then it's limited coverage like years 2 and 3. But there was no limit as to, like with short-term medical, short-term medical, that you have a certain length of time that you could do it. So I would say I would go with, look into all these different options if you're going out there. Depending on your religious beliefs, with different sharing ministries out there, which kind of act like health insurance, but they can't call themselves health insurance, so they're very different in that regard. And some of them, like you would write a check to a certain person, whereas this one, it acts more like the chassis, I guess you could say, of how health insurance works. So it's kind of the framework of health insurance, but it's not health insurance. Like, they don't use terms like deductible, they use like terms like unshared amount and shareable instead of covered and things of that nature. So something to keep in mind. And then no matter what, I would recommend, just for your own guidance, to make sure that you're happy with what you're getting, make sure to ask about networks. So if you have doctors you really want to see or hospitals you really want to see, ask if they're available. And then if they're not available, what would it cost to upgrade to maybe see that doctor? Or if your doctor is a network, is there a network that maybe is a little bit less expensive that your doctor's not in that you could save money in? So just a couple little tidbits. Hopefully you found this video to be helpful. If you did, please give a thumbs up. And if you have additional questions, feel free to leave them in the comment section down below. I can speak in general terms. I can't necessarily speak about your situation, but I'll do the best I can to help you. And if you're not subscribed to this channel, please subscribe, where I give at least tips on growing your e-commerce business. So depending on how you found this video, as to whether or not maybe this would help you in the future. So wish you all the best and have a great day. Take care. Bye-bye.